My name is JT Wrong, and here you see a student result of ours that is with us since 1 year now, trading with real money. Students first trade with a demo account using not real money, it's called, and then once they're ready, they trade with on their own behalf using a real money account. And here you can see so far how the trader lost 5 times $100. This is $500 and made 3 times. When going here to the right side on the trading performance, you can see how this trader made, like one time it was like $920, then it was like $130 and $400. And when losing money, it was just like smaller, it was just $100. What I want to tell you here is that how we make it to lose $100 for each trade, how we make $500 or even $900 for each trade. And that means we don't need to have a high strike rate, it's called. That means we don't need to have more winning than losing trades. It's more about losing less, losing $100 and making $500 or even $800 for a trade. This here, what you see here is the risk reward ratio, and that you understand how what works for us very well. If we adjust $100 for each trade because it's maybe a $10,000, a $5,000 or a $3,000 account, we split it into 10 trades. For some that are not that advanced, we're talking about 15 or 20 trades because it's less stressful, but I think 10 is always very nice. And then you can see here on the left side the strike rate. So it means if 10 trades out of 10 trades are right, we have a strike rate of 100%. But this is not the practical side. On the practical side, sometimes we have only 3 right trades and 7 losing trades, or 4 good trades and 6 losing trades. If our R multiple, it's called, we call it just risk reward ratio, not R multiple, we want to be accurate with that always, is for example 40%. That means we have 4 winning trades, we made 4 times $500. We lost 6 times $100 because we adjust each trade within $100. You're going to learn this over the playlist, also here in this video. You can see the trader would have made $1,400 because 4 times making $500 is $2,000 and 6 times losing $100 is minus $600. So the trader made $1,400. That means even though when having 8 losing trades or 9 losing trades, when having a risk reward ratio of 5, we wouldn't lose that much money here. And this is something what is very important with us with working with a good risk reward. What I can also tell you that most trades that you see running with a risk reward ratio 1 to 5, they go with 1 to 7. That means having only 3 or 2 winning trades and 7 or 8 losing trades can make us already earn money. So I'm going to show you something what we use for our trading students, and this is something what is very important. Andre is going to move on in the next video using indicators, using a zigzag indicator, specific length. The majority problem is that we as traders, we read this one book or we watch this one video and it always tells us use this indicator or use this trading signal and it will give you money. But the problem is just it is not the trading strategy that is bringing you money. It is the market experience, and then you add the trading experience, the trading strategy I meant. Because when you see as a student, when you see by yourself as a trader that the market goes up, I think the major problem is not taking the $1,000 move. It is more about when taking the $1,000 move, not losing more than $1,000. And the better the strategy, the less I think we can lose and the more we can make. So in this case, and this is how we start, we first sit on the computer. We always trade over computer. There's some people, they trade also over the phone, but we're not that kind of people. We always trade on the computer. And if our first impression is by looking at the same market always at the time, and we see that the market wants to go up, this is the S&P 500 futures, by the way. If we see that the market goes up, then we start applying first our trading indicators and so on. That means if you cannot see if the market goes up or down, we highly not recommend to use any trading strategy too much or any trading indicator so far. It is the market experience itself. And then that's why look at this video series multiple times, make pictures of what you saw the first time, and then after 1 or 2 hours trading, what you saw afterwards. And then you use this trading strategy, and this is what will make you definitely a better trader. So the first picture, you can see the trader assumed that the market was going up. And then on the second trade, you can see how the trader is now searching for trading up trades. So you can see here how he's trading here a green candle, what we really love to trade, and then adjusting here $100. In this case, he was even having a way smaller stop placement. But what we do is mostly like up here, for example, having a green candle, our stop placement at the lowest point. We have a very good broker so far because we trade on the real exchange to adjust $100. We don't need a $50,000 account for it. We have trading students starting $200, $2,000, $20,000, $200,000. And the thing is, it is enough to start, I think, first not with real money, and then just like to look forward, can I duplicate $3,000 multiple times. I think this is what the first step should be. So you can see here how the trader sees that the market goes up. And then in the next videos, what we're going also to show you how we read candles. You can see that the trader is adjusting here $100 and his risk reward ratio is 8. That means it would be $800 in win. That you can see that it's real, that we're not just talking. I think it's very important. And for us, it's very important what Andre is going to talk about. If we see that the market does a certain amount of moves, like within a specific length, that you see here, that it makes sense to have a smaller stop placement, because the smaller the time frame, the smaller the stop placement. And I think we don't need to have any other chart than just using the 1 minute chart, because when making it small, you can already see the bigger structure what we're going to use. Hope you can take something out of this video. See you in the next one.